Hello, I'm the property strategist Stephen Chong. Last month, we have come across the worst stock market crash since 2009. Today, I'm going to share my personal view whether buying stocks or buying property is better. Make sure you watch until the end so that you won't miss any of my important message. Last month on the 24th March, you can find DBS share was trading around $18, which is around 30% discount from the price in February. So if you manage to catch the low, today you are sitting on 7% paper gain and you may expect it to grow higher. Whereas for property, where can you find a 30% discount? It is hardly you can find even a 15% drop. So, does that mean buying stocks are better? Take a look in the past history as reference. I use DBS share as an example because this is the biggest company that everyone familiar with. Back in 2007, DBS share was at the highest point $24 in July. Then it dropped and bounced back, dropped and bounced again until below $17. And you thought that's the lowest point, right? And then it recovers to $20 in April 2008. Wow, happy! You make 20% profit within just 1 month. What happened for the next 1 year will be the nightmare for stocks investor. This is our current position now. Will it rise or fall? So you have to be really careful because we don't know when is the bull trap and the real V-shaped recovery. When you buy the share, but it drops the next day. When you sold the share, but it went up the next day. And then you regret a lot. How many of you have this experience? This is the perfect chart for the roller coaster of emotion for stocks investors. If you are this type of people, I suggest you to invest in property instead. This is because stock market is highly volatile, liquid asset, and most people easily get emotional by the rise and fall. First, you must be mentally strong. Must be disciplined, not to fear of missing out by chasing the rallies. If you only have limited amount of capital to invest, property purchase down payment is 25% plus buyer's stamp duty. It is quite a huge lump sum that a lot might not afford. If you already hit the total debt servicing ratio limit, meaning that your income and your age restrict your loan limit for property investment, then you got to find alternative to invest. If your purchase flat and EC has not fulfilled MOP yet, you are not allowed to invest in any residential property within your 5 years of minimum occupation period. So, stock market could be your best option. If you want to have full control over your asset, you will be your own CEO and CFO for the property you own. You are the final decision maker to the property. You can decide who to rent, when to rent, and when to sell. Have sense of belongings. Property is something that you can touch and feel. You can renovate into your own tastefully designed. If you are CPF rich, there is a stock limit if you want to use your CPF to buy shares, and you can only use it for stocks under CPF investment scheme. I will put the link for the list under the description. In order to maximize your CPF usage, you should choose to invest in property. You can wipe out everything in your CPF OA for the first property purchase. If you like passive income, property investment to collect rental income for long term could be suitable for you. I have created a video on capital gain versus rental income. Which is better? Click the link above to watch on that topic. In my opinion, the first priority is always having a roof over your head. Aim for mid to long term to reduce your risk. Don't put everything in one basket. Try to diversify whenever possible. And your first home should be somewhere near your circle of concern and profitable. So, your first home can be very critical as part of your future investment roadmap. For those who have your own house already, it really depends on your age and finance situation. Whether real property or stock market, choose the one that you are more familiar with and good in. Contact me if you need my best plan for you. My next episode will cover the highlights of new launch in 2020. Thank you for watching. Bye.